right, the first quarter results of the new financial year have started rolling in with tech majors TCS and HCLTech announcing their numbers today. While TCS reported numbers largely in line with estimates, a weak set of results came in from HCLTech. Actually, disappointment from all fronts except holding on to their guidance. Tech is one of the worst affected sectors on global macro environment cues, be it project delays, attrition or layoffs. As the year starts with subdued numbers, what's in store for the IT sector? Let me go across to my colleague to get more details on today's numbers before we continue our discussion. Anisha is here talking about TCS and HCLTech.
Well, yes, TCS and HCLTech both reported their earnings. While TCS has got a bit of a thumbs up from the street, it looks like that HCLTech is a thumbs down. Let me start with HCLTech because that reported rather disappointing set. The revenues declined by 1.2% on a sequential basis. Margin has come below 17%. And look at that big drop in profitability, almost an 11% drop coming in as far as profit is concerned on a sequential basis. The bad news doesn't end there because if you look at the headcount addition, it's actually negative for the quarter. There is also the fact that there is no impact of wage hike, and despite not having a wage hike, their margins have dropped to below 17%. The silver lining in the numbers, if I can call that, is the fact that that the management has maintained the guidance. They're still looking at 6 to 8% revenue growth in FY24 with a margin band of 18 to 19%. So maybe they're expecting a very sharp recovery in the second half of the year. But if you look at the commentary coming in from the TCS management, they are non-committal about the growth in the second half of the year. And they also did acknowledge that double-digit growth in FY24 looks like a tall ask. This after the company reported a flat number when it comes to the constant currency in Q1. The street was expecting a 0.2 to 0.3% growth, so a slight miss there. A bit of a miss on the margin as well because we were penciling in 23.4. The actual number came in at 23.2, and that's because there was an impact of the wage hike as well. Profitability was a tad bit better than expectation, but the good news for TCS was the fact that the pipeline remains very strong and they've signed the deal wins to the tune of around $10.2 billion. And overall, if you look at the verticals, yes, BFS has slowed, but the bigger weakness was actually in the communications vertical. North America was weak, but at least the deal wins from North America has been $5 billion. So it's a mixed bag coming in from TCS. Not a big howler, but yes, a bit of a miss coming in from TCS and a bigger miss from HCLTech.
Ramp down or cancellation, like we don't see much of large scale ramp down or cancellation. There could be one-off instances here and there, but that is not driving the softness or slowness in the revenue. I think as I explained, it's some of the reprioritization that is causing the softness. On the Gen AI, it's again, we started talking about it in the yearly towards the end of last quarter is when we started talking about it. We are seeing pilot. Maybe I would say like it. I'm just making a guess. Maybe a couple of quarters down the line, you would see some more significant numbers that we'll be able to announce. I think it's going to take some amount of time for everyone to sort out the issues and understand what are the challenges, what are the benefits, and then ramp it up big time. So give it a couple of quarters.
Q1 is typically a soft quarter for HCLTech. Due to the fact that productivity benefits for a large number of contracts kick in during the quarter. Having said that, though we did expect this to be a soft quarter, our performance was lower than our own expectations. Our revenues declined 1.3% sequentially, and our revenues grew 6.3% on a year-on-year basis in constant currency terms. In terms of an operating parameters, our EBIT came in at 17%. This is at the same level as our Q1 last year, which was also at 17%. On a sequential basis, it has declined from 18.1% to 17% this quarter.
And to speak more on what the outlook is for tech companies, is this a story of just individual companies or a broader pain in the segment? And what they make of TCS and HCLTech numbers? I'm joined now by Sandip Agarwal, independent market expert. Aditya Shah, founder, Hercules Advisors, is with me on the show. I'm speaking with Moshe Katri, Managing Director, Equity Research, IT Services and Payments. Welcome to all of you, and thank you so much for speaking with us today. Moshe, let me start with you and your first take on the numbers that we've seen this evening.
As expected, muted results. I don't think there's anything new here. A couple of potential positives here. Obviously, the booking numbers look pretty healthy. second consecutive quarter that your TCV is above 10 billion. At least hypothetically, that should maybe help visibility for the second half of the year, despite the fact that TCS hasn't really commented too much on that. Look, in general, we're definitely seeing a moderation in spending after peak spending during the pandemic. 2023, calendar 23, looks like a transition year for the sector more than anything else. And again, I think at this point, it's more about what happened during the second half of fiscal 24 than anything else for the sector and whether visibility looks better. One last thing I wanted to highlight, it seems that some of the local IT staffing companies in India are talking about an uptick in demand for lateral hires, which is something we haven't seen for 18 months. If that's the case, maybe we are looking at better visibility, especially when lateral hires come through. They actually get deployed pretty quickly, and that's a sign that maybe you're starting to see some of those new large deals getting ramped, and that should help maybe the second half of the year. So we'll see what happens.
Trends are as expected. Lower spending, by discretionary spends, those kind of clients not putting in too much, reprioritization of what kind of projects they want to put in. Let me come to you, Aditya Shah, on what you glean from the management commentary today, because we know there's pain. I suppose the biggest question right now is how long does it last? And are these numbers as bad as expected or worse?
Good evening, Tamanna. So in my opinion, the numbers are along the expected lines. The whole IT sector, in my opinion, will not do anything for the whole calendar year of 23. And in 24, somewhere we should expect some sort of a recovery as the US economy continues to recover from the aftershocks of the very fast interest rate hike cycle that it is on. So in my opinion, the numbers are in line. Anybody who did not expect this slowdown is not really correctly analyzing this. The management themselves, as Anisha already said, are very non-committal, and they themselves do not know when these spendings are going to come back. We've already seen the US BFSI space also going through a massive turbulence. Now it is all settled down, and over a period of Q2, Q3, Q4, you will see very tepid numbers. And somewhere next year, we could see some bit of recovery. So net, in my opinion, very stable numbers. The slowdown was already expected. Now we've got to see when the management start to guide confidently. That's the first indication that, look, recovery is coming in. And as Moshe also said, the deal wins are not stopping. The deal wins are really stable. So in my opinion, nothing to complain about. The numbers can be 5-10 basis points here and there. But net, the slowdown was expected, and it will continue in H1 and H2, both of these half, all through 2023.
Sandip Agarwal, do you think you will see a reaction tomorrow to the kind of numbers that have come? I mean, HCLTech is saying, admittedly, it's worse than we expected.
Yes, of course, as rightly said by both Moshe and the previous speaker, I would agree that in case of TCS, there are both good and bad news mixed. There is some negativity on the front that management seems to be non-confident or non-committed right now, but at least they have good order books and they have executed well on the margin front also. But in case of HCLTech, there is no such, silver lining which we can see, except the fact that guidance has been maintained. Now, I would just like to add this thing that tomorrow, maybe, we may not see a reaction on TCS, but we can see a knee-jerk reaction in HCLTech, and obviously going by their numbers and both on revenue and margin, it is very much justified. But I would only like to, say that this is a B2B business, and, few clients doing well in 1 or 2 quarters can change the whole thing. And it is a Q over Q business. So for example, you saw a decline of 1% in this quarter. Next quarter, if you see a additional 1 or 2% growth, it sets up the base right. So we have seen this in March of 21, also March, April, when, there was huge amount of pessimism. Management themselves were talking of big negative growth and all. And suddenly in 1 quarter, everything changed. And remember that we are not directly related to the NASDAQ companies, but, we have a rippling effect of them. So At that time, also the first positive signs came from all the big techs from the US and then followed by Indian companies. In my opinion, we are seeing some kind of positive data on those front. So maybe 1 or 2 quarter, I'm not so strong believer that H2 will also be a weak half. I will rather say that maybe Q2 is also a little muted, but beyond that, I don't see any reason to be pessimist.
Seeing the tide turning a little sooner, in your view, let's take a look at the cues that are coming in from some of the commentary on salaries, attrition numbers, new onboarding. Aditya Shah, I'll come to you on this first. That's definitely showing a dampening. I mean, HCLTech has postponed its entire appraisal cycle by 1 quarter. TCS has added very few employees relatively sequentially as well. There's a drop there. Attrition rates are low, and that's possibly a good thing. What are the signs that you're reading there?
Very damn signs that we are seeing. TCS is already saying that the UK and the European side of the business is not doing too well. The US side is stable. The BFSI space, the turbulence that the BFSI space faced in the US is starting to settle down. Similarly, negative commentary from HCLTech that although they maintain guidance, but the visibility is not that great for them as well. So net, in my opinion, there is absolutely no positive commentary from any of those managements. But here I would like to point out, bad time for a business is a great time to look at the stock. In my opinion, rather than nitpicking quarter by quarter, you have to accept that the whole of this year will not be great. And at some point in time, these stocks will continue to keep correcting. And these could provide a greater and a good opportunity for any long-term investor who will have a 3 to 5 year view. The tech spends will not end here. The growth will not end here, but it is just a small pit, a small bottom that we are creating slowly and steadily. In my opinion, in 24, we will come back. So net, no positive commentary as of now. Maybe some positive commentary will come in the second half of 23, but the real good commentary should come in first half of 24. But it's time to look at these stocks.
It's time to look at?
It's time to look at these IT stocks, the services stocks, HCLTech or Infosys or TCS as the results come.
Okay, it's time to look at them. Okay, Moshe Katri, the signs, what are you reading in the tea leaves from all the data and commentary around the employment piece of the puzzle? And I suppose the thing to look out for is that everyone knows it's a tough time. How are these companies preparing to ride out the storm? Do you see any clear plan there?
I would say there are multiple levers in the model, right? The pyramid structure, what sort of utilization rates you're comfortable to have on your bench. But as I said earlier, we did hear from some of the local IT staffing in India that there's a pickup in demand for lateral hires. I think the number that they suggested in July alone, it was a 10% uptick. And these are lateral hires that will be deployed starting in October of this year. So if that's the case, for me, that means that maybe visibility is looking a bit better, and maybe we'll start seeing some of that recovery during the second half of fiscal 24. The hires that you're talking about in terms of college hires, these typically have to get trained. That takes time. So I think you can kind of play with that and adjust it in order for you to be able to manage your margins.
Right. Just one last comment here from Sandip Agarwal on, what do you think will be the game changer? We see that inflation might be easing off in the US. The economy is not doing as badly as was expected. Do you think things could change pretty quickly? And if they do, which of the IT pack seems the quickest to recover in your view?
So I firmly believe, and this is based on data. If you see last 25 years of data, whenever IT companies have postponed the variable pays or the wage hikes, most probably in most of the cases, that quarter or the next quarter makes the bottom of the stocks in terms of stock prices. Business may bottom with one more quarter, but the stocks bottom during that period. So we are already seeing that postponements and all those things happening now. Secondly, as I said, it is a B2B business. 70-80 clients basically can contribute most of the revenues. So, this businesses turns very quickly. So I would say that, with inflation pulling off in US and, now most of the commentary is becoming neutral from negative, I would say that turnaround is very close by. I will not hazard a guess, but I would say that, I am more optimistic on H2. And I will not be surprised that if you see the change in commentary in Q2 itself.
All right. So the change in commentary might be in Q2. According to Sandip, Aditya says wait for calendar year 24. Aditya, is this the time to stick your neck out and buy some of these counters?
Yes, definitely. We've started to nibble into all of these companies. As a disclosure, we hold TCS, and there's no perfect time, or you cannot predict the exact bottom. So you have to keep nibbling into these stocks. The commentary will change at a certain point in time. It's not as if companies in the US will not spend on the tech side of it. So in my opinion, I am positive on the IT stocks. The businesses will take time to bottom out, but that's how market cycles really work. Bad time for a business is a good time to buy this.
Absolutely. All right. Thank you so much to all of you. This is just the beginning of the whole results season and the beginning of what we're seeing from the IT pack. A lot more to go, a lot more data to come in. So it will be interesting if everyone has had the same experience in the June quarter. Thank you so much for joining us.